Welcome to the deep dive. Today, we're looking at an investment angle you might not think about much. Vacant land. Could be surprisingly passive.
That's right. And we're digging into an article here from the AHLA blog. It's by Laura Herbolzheimer, called How Vacant Land Can Serve as an Excellent Passive Investment.
So our mission for this deep dive, really unpack that piece. We want to get to the core arguments, maybe find some, unexpected points about why vacant land gets framed as this unique, maybe even excellent passive option.
Yeah, exploring this sort of alternative real estate path.
And what the benefits could mean for you, the listener.
Okay, let's jump in. The article starts off by drawing a pretty clear line between vacant land and the usual stuff.
Like rental houses or office spaces.
Exactly, the traditional things. And the key difference it hammers home is the upkeep, or rather, the lack of it.
Minimal upkeep. It calls vacant land low maintenance. That seems central to calling it genuinely passive.
Totally. And the article explains why it's so low maintenance.
Yeah.
I mean, think about it. You're not a landlord dealing with tenants.
No calls about leaky pipes at 2 a.m.
Right. No roofs to fix, no heating systems breaking down, because there are no buildings to maintain.
Makes sense. No structures, no complex systems. Unless you develop it, no utility bills, none of that constant nagging upkeep.
And that cuts down the hands-on work massively. And the unexpected costs, too. The article stresses how this frees up your time, your mental energy.
So you can focus elsewhere? Other investments or just, life?
It's about ditching those landlord headaches.
Okay, so the passive element is really about skipping the operational chaos, but real estate usually costs a lot up front. What about the entry point for land? Does the article cover that?
It does, and that's another point it highlights as pretty appealing. Affordability. Vacant land can often be cheaper to buy.
Especially maybe in rural spots or areas that aren't fully built up yet.
Exactly. Places outside the big city centers.
So it could be a good way in for someone new to investing in property. Or maybe just diversifying without, needing a massive loan for an apartment block.
Absolutely. And the piece gives some practical tips for finding affordable land. Like, look for areas that are kind of emerging, showing growth potential, but aren't fully developed yet.
Okay.
It also mentions checking out financing options, specifically for land. Sometimes the terms are different than house mortgages, maybe need a bigger down payment, but still makes it doable. And it points to things like land auctions or foreclosures, places you might find deals below market value.
All right, so low maintenance, possibly cheaper entry, but no building means no rent checks, right? Where's the return? The article mentions steady appreciation potential. How does dirt just appreciate?
Yeah, that's what the mindset shifts, from monthly cash flow to long-term value increase. Capital gains.
Okay.
The article is clear. You don't get rent, but the land itself typically goes up in value over time.
Yeah.
Usually driven by, basic economic stuff.
And it says the drivers are things like population growth, more people needing space.
Yeah, that plus infrastructure improvements, new roads, utilities going in.
And just general demand for housing or businesses rising in the area.
Precisely. The article gives examples you can picture, like a city growing outwards, needing more land.
Or a big new company moving nearby, maybe a new highway exit.
Right. Those kinds of things make the surrounding land more useful, more desirable, and that pushes the value up.
So the play is finding spots where that growth seems likely, buying the land, and then basically holding it while those external factors work their magic, hoping for a nice profit when you eventually sell.
Exactly. But what's interesting is the article says you don't have to just sit on it passively while waiting. There are different ways to approach it, depending on what you want.
Ah, okay. So it's not just buy and hold unless that's your plan.
Yeah.
What other strategies does it mention, like for income or long-term goals?
Well, for getting some income while you hold, it suggests land leasing.
Leasing to who?
Could be farmers, for crops or grazing, or maybe leasing to a renewable energy company.
Oh, like for solar panels. Or wind turbines.
Yeah, that kind of thing.
Yeah.
Or even renting it out for recreation.
Recreation? Like what, people camping? Or hunting.
Exactly. If the land's suitable, you can lease it for hunting seasons, maybe weekend camping, stuff like that. Generates income without you having to build anything.
Huh. Interesting.
It also mentions timber harvesting. If you've got wooded land, you could sell some timber, manage the forest.
Okay, so those bring in some cash flow. What about the purely long-term ideas?
Right, the classic ones. There's the hold and wait, just buy in a good spot, let the market lift the value, and sell when the time's right.
The patient approach.
Or, if you want to be more hands-on, the development route. You could partner with a developer, maybe build houses or commercial buildings yourself.
So sell developed property for a higher price.
Right. The article really emphasizes this flexibility. Land lets you choose your level of involvement, kind of.
Thinking bigger picture now.
Yeah.
How does land compare to, say, stocks or even developed properties when the market gets bumpy? The source says it has low market volatility.
Yeah, that's a pretty big selling point in the article.
Mm-hmm.
It suggests land is more stable than the stock market, which, can go up and down like crazy, and maybe even more stable than developed real estate, which can be affected by specific industry slumps or problems finding tenants.
Okay, but why is it more stable? What's the reason?
The article links it back to, well, what land is. It's finite, right? They're not making more land.
True, scarce resource.
And generally, as populations grow and economies expand, the demand for that scarce resource goes up. So it tends to hold on to its basic value just by existing. It's fundamental.
It's not tied to the success of one specific factory or whether you can keep renters in an apartment building.
Exactly. That scarcity factor is key to the stability argument.
Makes sense. What about other financial aspects? Taxes. Does the article talk about tax benefits?
It does mention potential tax advantages.
Yeah.
Owning undeveloped land.
Yeah.
Well, depending on how you use it or plan to use it, you might be able to deduct certain things.
Like what?
Property taxes are often deductible. Interest paid on a loan you took out to buy the land. And maybe some development costs if you eventually go that route.
I think I saw something about using it for farming to get lower property taxes. Is that right?
Yeah, that's a common one. Often, if the land qualifies for agricultural use, maybe you lease it to a farmer, you can get significant breaks on your property tax bill, even if you're not farming it yourself.
Okay.
And then for the long game, you hold the land for a long time, say over a year, before selling. Any profit is typically taxed at lower long-term capital gains rates.
Compared to short-term profits.
Right.
So potential savings there, too.
Let's circle back to that main idea, the passive part. The article really keeps hitting this low-maintenance angle.
It really does. It's like the core message the author wants you to remember. Once you've bought it, the actual ongoing effort is minimal.
Basically, keep an eye on its value and pay the property taxes. Pretty much. It strongly pushes that set it and forget it appeal, which is, really attractive if you want investments that don't need constant babysitting.
Yeah, less work.
And the article gives tips on making it even more passive, like choosing land that doesn't have super complicated zoning rules or environmental issues attached.
Fewer potential headaches down the line.
Right, or picking land that doesn't need a bunch of immediate work or upgrades. And it wisely suggests working with reputable land companies, too.
To handle the buying process and paperwork smoothly.
Exactly. Makes the initial step less stressful.
Okay, one more big benefit the article brings up. Protection against inflation. How does owning, dirt help protect your money when prices are rising everywhere?
It comes back to that idea of intrinsic value and scarcity again. Generally, when the cost of living goes up,
Yeah.
the value of tangible assets, like real estate, tends to rise too. Think about it. The cost to build anything on land goes up: labor, materials, and the demand for the finite land itself often increases as money becomes worth less.
So the land becomes relatively more valuable.
The article argues that land's scarcity and fundamental necessity make it a pretty reliable store of value. It can hold its value, or even appreciate faster than inflation sometimes, helping protect your wealth's purchasing power.
A real asset versus just cash losing value.
Oh.
Okay. Now, before we wrap up this deep dive, there was one really important practical point in the source: protecting the investment itself. It talked about vacant land insurance.
Yes. Crucial point. It adds a bit of responsibility, but it's necessary. The article explains this insurance is mainly about liability.
Liability, like if someone gets hurt on your empty land?
Exactly. It protects you, the owner,
Yeah.
if someone makes a claim because they were injured on your property. And this includes invited guests, like maybe a surveyor,
Okay.
but also, and this might surprise some people, trespassers.
Wait, really? Even if they weren't supposed to be there, you could still be liable.
That's the risk, yeah. Laws vary, but liability can definitely extend to trespassers in some situations. So this insurance is key protection.
What does the policy typically cover, according to the article?
It mentions covering legal defense costs if someone sues, whether they were invited or not. It can cover medical payments for injuries, sometimes limited property damage, maybe from a fire, and generally protecting you from claims by both guests and trespassers.
So it stops your passive investment from suddenly becoming a very active, very expensive legal problem.
Precisely. It's a vital piece of the puzzle for responsible land ownership. You need that safety net.
Good to know. A very important consideration.
Absolutely. Rounds out the picture of managing this kind of asset.
Okay, so bringing this deep dive toward a close, we've walked through the article's main points. Vacant land as uniquely low maintenance, genuinely passive, potentially more affordable to get into.
Driven by appreciation from external growth, flexible strategies, leasing, timber, holding, developing.
Relatively stable compared to volatile markets, potential tax breaks, that set it and forget it vibe.
With the insurance caveat, of course.
Right, and acting as a possible hedge against inflation.
The source definitely builds a strong case. It concludes that owning vacant land offers this chance for a stable investment, potential passive income streams, and, benefits that aren't always obvious compared to traditional real estate.
And it wraps up by turning the question back to the reader, or, in our case, the listener.
Yeah, leaving you with this thought. Considering its unique passive quality, its potential time to growth, the different ways you can use it, is owning vacant land actually the right investment move for you right now? Something to think about.